Happy Friday, ladies and gentlemen, and welcome back. I'm your friendly neighborhood PM here to give you your top 3 market points of the week. Now, we are on pace to finish very strong for the week. So without further ado, let's dive into your top 3 points to see what's driving markets today. At point number 3, it was Nike releasing their quarterly earnings report and surging as a result of that. Now, Nike did beat on revenue despite seeing year-over-year declines on their revenue. And what's really sending the shares surging this morning is the fact that they guided to the upcoming quarter of a smaller than expected revenue decline, actually, than previously expected. So less bad news, so to speak. The street was expecting around a 12% decline coming up in the upcoming quarter. Well, they're guiding to more of a 5% decline. Now, this is really key for the company because Nike has been undergoing turnaround efforts to get back to that kind of premium brand quality that they have in the past. And their focus is really on improving investor relationships and retailer relationships, as well as product innovation. So only time will tell over the coming months if they're able to execute on this turnaround plan. At point number 2, it was FedEx releasing their earnings results and falling instead of rising like Nike did. Now, FedEx is falling as a result of the fact that they're only giving guidance for the upcoming quarter and completely scrapping a full year guidance outlook. Now, this is the first time in 13 years that FedEx has not issued a full year guidance, and that's really weighing on the stock today. Now, their key reason for doing so is the fact that the trade policy outgoing in the global economy is rapidly changing and evolving so quickly that they cannot accurately forecast the demand and how to best tackle the new trade paradigm. So anytime that they can get some more clarity, that's going to help out global shipping companies like FedEx. But right now, uncertainty is not their friend. But at point number 1, maybe it might help them a little bit. We have the U.S. and China agreeing to a new trade framework this week. Now, details are still waiting to be released completely. But broad strokes is that the U.S. and China have come to a broad trade framework agreement, with China waiting to approve and review eligible exports coming out to the U.S., as well as the U.S. removing some restrictions that were placed on China. But also pivotably, China also agreeing to now, once again, trade and ship over rare earth metals, which are key for semiconductors, magnets, things of that nature. Very key integral mineral that the U.S. needs for manufacturing purposes. Now, what's really key for that is obviously these are the 2 largest global economies, and any kind of agreement from a trade standpoint really provides clarity for the entire world, not just these 2 countries. And as we've seen over the prior couple months, any kind of volatility on trade policy is not a good thing, and the markets do not like it. So as we get further and further agreements on trade, maybe this will be a catalyst for ongoing trade deals with other countries and the U.S. and help to really provide clarity for the markets going forward. Now, that does it for your top 3 points this week. What are we checking out for next week? Well, next week it's going to be pretty muted because we got the 4th of July next week. So there's going to be no video. And since we're not going to see you next week, please go out, enjoy the weekend, enjoy next week with your friends, your family, and we'll keep you posted on everything that changes in that time period at the upcoming video in 2 weeks. But until then, we'll see you at the same time, and enjoy the holidays. Happy 4th. Thanks again.